The jobs report defines this session. American employers cut 23,000 jobs in July against forecasts for a gain of around 80,000. Unemployment ticked down to 4.1%, and revisions stripped a further 103,000 jobs out of May and June. Traders read a weakening labor market as a Federal Reserve rate cut becoming more likely. The 10-year Treasury yield fell to 4.63%, and stocks opened higher with the Nasdaq up nearly 0.9%. But watch what happened next, because it matters more than the headline. The leveraged and debt-funded ways of playing this trade have already given the move back. The 3x semiconductor fund touched 143.92 and is back to 136.65. Oracle touched 147.16 and is back to flat. The unlevered megacaps held their gains. That is a rally with a very particular shape, and this book owns the half that held. Microsoft now sits at the front of the queue on the strength of the only entry signal on the whole board that is still approaching rather than already passed. Equity sits at $5,118.32, up $8.70 on the day, a 0.17% creep that keeps the book green without any fireworks. The account is still 91.7% deployed, so the move is mostly mark-to-market on the single open position. Apple holds 15 shares at $312.67, last at $312.99, worth $4,694.85 with unrealized plus $4.80, and the synthetic stop at $306.42 leaves 2.15% of air. No fills since the last briefing. The engine stood pat, refusing to churn a position that is still above its stop. Microsoft jumped to priority 5 from 2, while Nvidia slid to 4 and Amazon and Tesla both came on as long candidates at 3 and 2. With only one position allowed and Apple at priority 1, the board is telling me the next long has to displace the old one before anything moves. The circuit breaker meter reads 0% of 5% used, so buying is still permitted, and cash of $423.47 plus buying power of $14,839.46 gives room to act. Lifetime realized sits at $113.76 over 6 round trips with a 50% win rate. The edge is thin, so the next few hours hinge on whether Microsoft can justify a swap. Microsoft goes to the front of the queue, and the reason is precise. It is the only name on this watch list whose buy signal is still coming rather than already gone. Its momentum gauge sits 3/4 of a point below the trigger line and is climbing fast, having covered half a point in the last hour alone. Crucially, all 3 of its quality filters already pass, which means the moment that gauge crosses the line, the trade fires. Nvidia has the best chart on this watch list, and, right now, the second best entry, and the gap between those two things is worth explaining. Its 3 quality filters all pass now, comfortably. The problem is timing. The momentum gauge crossed above its trigger line during the pre-market surge, while those filters were still a fraction of a cent short of opening. The entry rule fires on the crossing itself, not on the state afterwards, so that particular opportunity has gone past. Amazon is approved to buy and sits third, held back by the same piece of bad timing as Nvidia. Every component of its entry is now correct. The momentum line is positive, the fast average has crossed above the slow one, and price sits comfortably above its long-run trend filter. But the momentum gauge crossed its trigger line during the opening surge, before those filters finished opening, and the rule fires on the crossing rather than the aftermath. Tesla has the best price move on the board today and the worst entry among the approved names, which is an awkward pairing and the reason it sits second from the bottom. Its quality filters are not just passing, they are passing with room. The momentum line is strongly positive and price sits well clear of its long-run trend filter. Apple is the position this book holds. 15 shares at $312.67, marked around $311.74, roughly $14 underwater. It sits at the back of the queue because it cannot generate a buy signal of its own, and the numbers are not ambiguous about that. Only one of its 3 quality filters passes. The momentum line is well negative, and the fast average sits 60 cents below the slow one.